Hey everyone, thanks for joining. This is CryptoVatsik. Nothing of what you're about to see is considered financial advice and they're just my opinions. If you do enjoy this content, I would really appreciate it if you gave this video a like and don't forget to subscribe to the channel for future updates. Let's go. Okay, today we're going to be covering RUNE. We're on the weekly here on Binance and we're going to start with this high time frame to get those key levels, and then we'll drill into the lower time frame of what we're currently seeing. I've got some markings on the chart currently, as you can see. So really just from back here, we had this area of consolidation back here in 2020 that really respected these candle closes. Okay, so we had the high here. Okay, candle closes, not able to breach it. Yes, we had some wicks above, and then basically from our swing low, candle close back there. Okay, that's our swing low, and the candle closes, and then we had our swing high. Okay, so this is that area of consolidation. We had many wicks below, deviations, and many wicks above until we smashed through that. Okay, that was our accumulation and consolidation area that really led to that upswing of the bull market that this coin saw. Okay, and then we had our all-time high up here around $21. So as we started to distribute down, we just saw these key levels, okay, being flipped. So we had our major area of support from these wicks back here, basically confluence here, okay, with this low, and then these lows over here until it's ultimately lost. We had a really big candle wick here, really a last-ditch effort to fight to hold this level until it was lost, and then we have a bearish retest here with this wick, bearish back test, underside retest that led down to this low. This is our last macro low from June 2022 that we had a nice push up. We had a bit of a rally, okay, on this upward sloping trend line until that market structure was lost. Okay, we came back down. We ultimately consolidated a little bit at that level again at this point. A very weak bounce. Okay, so a failed bounce to really come up and push these highs, and then ultimately, I think this is when we had the FTX collapse, creating our new low down here that we had around $1. Okay, so now what we've done when we lost that level, this low, okay, this June low, we essentially lost it. Okay, we fought to hold it here, as I said, and then we lost it. And simply what we've done up here is we've had that bearish underside retest, just like we saw up here. Okay, so we've lost the level of support to resistance. Okay, and so now that is our current resistance. Okay, we've also got some really nice respect going on with these candles. Okay, candle close at this level, right around $1.37. So that's being high time frame really respected. Okay, on the weekly chart. We'll get into some lower time frame again here just in a minute, but basically what I'm seeing is ultimately a range. Okay, and so this range right here, it's essentially just from our swing high from this wick right here. Okay, we've got our wick up to the swing high, and then we've got our swing low down here. Okay, so we had made our swing low, this low, to our swing high. That created this current range that we're trading in. With ultimately our current support being the equilibrium of this range. Okay, that's currently our support. That is still valid. So would like to see that hold if you're bullish. Clearly, our major last ditch effort of support is down here, which is the range low, and also confluence with the upper consolidation range up here. Okay, this level right here of that previous consolidation that we had back here, as I said, in 2020, lines up really closely, okay, with the lower band of the current range that we're in, which was formed from this low. Okay, so essentially, we kind of have our first area of support here, which is the EQ. You know, you lose that, I'm targeting the lower band of the range, okay, which is our next level of support. And then from there, we will need to evaluate if that level holds or if we come back down to the lower area of this consolidation zone, okay? Now, if we, on a high time frame, break out of this range to the upside, okay, so we'll drill into the low time frame here again, and I'll get you this diagonal, show you this diagonal that I have on the chart here. But essentially, if we can break this current level that it's being very well respected on the candle closes, which is about $1.38 here, okay? If we can break that and really start to test this upper range, this upper band of the range, and this previous level of support that we had, if we can flip, really start to put some pressure onto that and flip that, then I think we would see a decent push, a decent bear market rally, targeting this high or that high. Okay, so that is the key criteria really is the first one, flipping this current area of resistance that we've got on these candle closes on a high time frame. Okay, so not zooming into the 1 hour and having a flip of it, but on a high time frame on the weekly, a flip of that, and then a flip of this zone in here. Okay, so that previous area of support from here and from this June low. Okay, so you flip that. I think that we get a nice push up into these supply zones on the high time frame. Time will tell if that happens and how far it would go. However, we really need that first area of criteria to flip these for that to happen, and ultimately, obviously, needing to hold the equilibrium as support in the meantime. If we do not get that criteria, okay, and we just simply continue to have this steady decline in volume and not much of a push, then I will continue to let price fall. If we start to put pressure on the equilibrium, okay, and we start to deviate below it like that, then I'll just continue to let price fall and expect that we're coming all the way back down to the lower band of this range to really, again, retest the demand that's sitting within this wick down at that level. And especially if we get no sort of market structure breaks along the way, where we just continue to have that steady decline, then I will just let it fall, let the price fall until we eventually get that market structure break and enter on the retest, as I say. Okay, let's drill into the 12-hour now. Okay, so here's the 12-hour now. Here's that previous trend that we had. Okay, like I said, when we made our June low back here, we had a nice market structure break, right? So we had this lower high, we had a lower high here, okay, and ultimately a higher high. So we broke out of that bearish trend, and then we retested that level of that previous lower high with a nice push up. Again, retested it over here, and then ultimately, technically a higher high, and then just steady grind up, higher low, higher high, higher low, higher high. Okay, ultimately creating a minor trend until this is the origin of the breakdown here. Okay, we lost that. Go like that. There we go. So we lost that trend. Okay, we had a market structure break. Okay, we broke that trend. We had a bearish retest up here. We were not able to sustain this lower high, this higher low. Apologies, this higher low right here. Okay, we made a lower low. So ultimately we lost that, and then we came all the way back down and just retested the demand in this candle again on these lows, and it wasn't enough. Okay, it was like a weak push, like I said here. That ultimately was lost. So now if we're drilling into the current zone that we're trading in, okay, and by zone, I just really mean this current range that we're in, okay? So we've, again, established our range high from this high, okay? And we've established, of course, our range low from this low. We technically did not get a market structure break in this area. I know it looks very similar, but we really didn't, okay? So we had this lower high here. And we really struggled to make a higher high. Okay, the candle close actually came right back down and closed right at that same level. Okay, and then same with this one, swing failure pattern, was not able to continue any kind of trend. So you're looking for really that market structure break. So previous high, okay, previous lower high, you're looking for that break up and a retest, okay, and we weren't able to get that. So nothing in here was screaming bullish, okay, really just choppiness. We had a bit of a wedge form here, sure, that broke to the upside, but that wedge target is now complete. Okay, so that trade is in hindsight. So now we just have to look currently at what the most probable direction in price is, and start to look at positions that would favor those probabilities. So for me, I come at it as, you know, from assumption, a standpoint that the trend is down, right? So it's probable that the trend will continue down until we're invalidated, okay? And so what I would do is I'd be looking for a sort of signal or confirmation that a downtrend is invalidated. Okay, so we've got this diagonal here. Sure, okay, so we can work with that. We've got the equilibrium here that we're working with as well. Okay, so the assumption, if you're going long, is that we need to hold the equilibrium here as support from these previous highs, okay? And then we would like to see a break of that diagonal, and you'd probably, a target probably would be first is just the upper band of this range with the assumption that the trend would continue down. Okay. And so if we do get a second area of confirmation, meaning if we break above the upper band of this range up here, then the push could continue a lot further, in my opinion, right? So we've broken out of that really strong macro resistance, which would indicate potential bear market rally up to these previous highs that we had looked at earlier. All in all, really, you're just trading within this overall range. So if you're if you're looking long, you're getting long around the EQ, targeting the upper band, or you're getting long around the lower band, targeting the EQ and the upper band. Otherwise, short term, if you're going short, you're shorting upper band, targeting the EQ, or you're shorting from the EQ, targeting the lower band, sort of thing. But that is all is that to say is that if we break out of this range to the upside, then I'll change my tune. I'll change my bias. It's fine to be wrong. If the trend is broken and we come up and we break this and we start to hold this level, then I'll start to look for a long term. I'll look for longs targeting this previous area of support that we had recently up here, which is now resistance. Otherwise, along the way, looking at all these previous highs as well as target points for position closes or take profits. Again, these long trades, if you're looking for longs, they're only if, it's all if we see a break of this diagonal, if we see a reclaim of this range, if we see a breakout to above the range, if we see the equilibrium hold, if we see the lower band hold. These are all ifs, right? Otherwise, the assumption is that this will continue down. The question is where. And so we mark out those key levels on high time frame on the log chart here. Okay, if we break those levels, then we start to look at where we could go next. Okay, and we look down there, ultimately down here possibly as well as a target if we start to continue to grind down, which is the assumption, right? We're in a bear market. You have to assume that it will continue. But if you want to not wake up one Monday morning and see that we've pumped 50%, then you've got to stay objective, in my opinion, and you will be able to identify these shifts in trends or a trend reversal a little bit easier if you don't just have the straight bias or assumption that it'll just continue down. Let's go to the 4-hour. Okay, so on the 4-hour, clearly just sweeping this previous low currently. Okay, I know that's a terrible line. Let's do a straight line here. Okay, sweeping that low currently, and obviously we are below these moving averages, the 100 and 200 EMA. Okay, so we are under resistance, a few different areas of resistance as well as the diagonal is resistance. Okay, so it's basically 3 or 4 areas of confluence of resistance that we're working with here. We've got 2 large wicks here on these last on these candles over here. Okay, so there's definitely supply pushing this price down. So if any sort of market structure break of this higher low, I expect that we'd come back down to this previous breakout level. Okay, so we had this area of consolidation that held it as support, and then it was resistance here until we finally pushed up with this wick and broke that. So if we break this market structure level, I think we come back down at least to that level. Then it's a question if this continues to consolidate and push and put pressure, like I said, on this downward diagonal for a breakout. If we don't get that and this is just weak and we start to break down and we do get that market structure break, and we don't hold this level, then again, of course, I'm thinking we're coming down to the equilibrium here around $1.23. Ultimately, it's just choppiness. There's low R&R in this kind of price action. So please play it as you see fit and with the risk parameters that you have set out for yourself, and do whatever trading strategy works for yourself. Okay, if you like diagonals or if you like ranges, I just try to cover what works for me and what's proven to work for me over the past 6 or 7 years. Okay, so if you did enjoy this, I would really appreciate it. Again, if you gave the video a like, thank you again so much for joining. I really appreciate it. And let me know what you think in the comments as well. We'll see you on the next one. You can always follow me on Twitter at CryptoVatsik as well. Thanks for joining. See you on the next one. Peace.